After last week's weak jobs data, the spotlight now shifts to inflation, which will set the tone for the Fed's big meeting next week. So the week kicks off Wednesday with the PPI, or Producer Price Index. In July, core producer inflation surged 0.9% month over month. It was the first sign tariffs were flowing into pricing, at least at the top for producers. This time, forecasts expect just a 0.3% rise in August. That's still hotter than the 2% annual target, but decelerating from July. But the real headline will be Thursday's CPI, or Consumer Price Index. CPI ticked up 0.3% in July, with expectations for a similar move in August. That's again above the 2% annual target, but not a runaway surge. It would also continue the narrative that tariffs aren't really impacting pricing. However, with the producer inflation already showing, we still expect tariffs to start filtering through at some point. So, what are markets thinking? Well, the stakes are high. We expect markets will continue to rally, though, even if inflation runs just a little bit hotter. More moderate inflation growth will likely be tolerated as a soft landing from the tariffs while still allowing for rate cuts. However, if we see CPI suddenly spike the way PPI did last month, stagflation chatter will pick up again and potentially mute any rate cut optimism. Again, all of this sets the stage up for the Fed's upcoming meeting and what the future rate cuts will look like. So, what do you think? Will inflation come in steady? Or could we be in for another upside shock? Let us know.